how this affects tax is in section 7502 of the Internal Revenue Code, it tells you that you're entitled to rely on the postmark date as far as determining, if you filed timely. And this date can be real serious. I mean, obviously for a tax return, there's a penalty for late filing. But for things like a tax court petition, which has to be filed, postmarked, 90 days, within 90 days of receiving your, what they call 90-day letter from the IRS, well, this new rule from the Postal Service means that a piece of mail that may get delivered to the post office on timely, but might not get postmarked for 1 to 3, maybe even 5, depending on weather and whatnot, 5 days later. What does that mean? You're late. And in a tax court case, it means you're out, because it's almost jurisdictional. For years it absolutely was. Now there's sort of some wavering around the edges of the 90 days. It used to be slam dunk, not 90 days, tax court has no petition or has no jurisdiction, and they simply dismiss the case for lack of jurisdiction. What does this change, or how does this change your advice? Well, I can tell you how it would change mine. Not at all. Because for stuff like this, you shouldn't take a risk of getting the postmark right. In fact, what I recommend for returns and anything that's of vital importance, I pay for certified mail return receipt requested. What should you tell your clients, especially those of you who are tax preparers? If your client is going to mail or is responsible for mailing their own return, I've seen some writings have gone into great detail about, this rule. That's a mistake, in my opinion. I would my instruction to clients for that, if I was a preparer, like my late father was, certified mail return receipt requested. End of story.